Good morning, everyone, and welcome to the Quantum Leap homework session, market analysis and trade plan setup for Thursday, April the 3rd, 2014. For those that don't know who I am, my name's Doug McKay. I am founder and head moderator for Quantum Leap. Quantum Leap is a self-organized learning environment. We've been around for close to 4 years, or over 4 years now, and each day we run a private chat room on Skype. And then each morning we come together and come into this go-to and take a look at the market, look at the macro to the micro, set our trade levels up for the day and our targets, and then we put this out on video on YouTube. If you are watching on YouTube after the fact, we do start with the basics of looking at the key numbers. We're going to go through them quickly this morning because we're running late, but then we'll get into some deeper in-depth chart analysis as we go. So you might want to skip ahead, but we don't take shortcuts. We start a routine every morning. That routine is the same each day, and as I always say, there's no shortcuts in trading. So if you're interested in finding out more, you can reach me. My email address is d.mckay@stealthtrader.com. And let's get to it. Before I get going, I have to get the legals out of the way. This information is for the purpose of educating members who want to expand their knowledge of the business of trading. It's not for trading or investment advice. You and only you are responsible for the trades or investment decisions you make. Trading futures or any instrument involves a risk loss. Please consider carefully whether features or options are appropriate to your financial situation. Only risk capital should be used when trading futures or options. Investors can lose more than an initial investment. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own trade plan, do your own due diligence. All right, so let's get right to the key numbers. I'm on a new setup here, so I'm struggling to find my way around. So I'm going to actually take a look at the market here for a second because I haven't seen where we're trading right now. So just let me take a look at where we're at. So we're trading in around the overnight VPOC. Looks like it's shifted down to 1882.50. So we're trading right now at 1882.50. Obviously, you know, we've been in this upward push. I still anticipate that we're going to go up and take out that 87.50. The 87.50 is the all-time high before it was adjusted. Of course, we put in some new adjusted highs, but the key number above us right now is this 1887.50. And of course, we're above the year open. We're in this balance zone, you know, fighting back and forth. The bears and the bulls we're fighting that 1837.75, which is our year open. And right now, the bulls have taken control. Our target, you know, for the last week has been that 1877.75 RTH. You know, adjusted high, and then the 80.50, which was the adjusted all-time high to the June contract. And of course, we just took that out the other day. We have a month high right now, which is now up at 1886.25. But we've had a pretty strong move over the course of the last couple of days. You know, we had something you don't see too often. We had a normal day followed by 3 neutral days, and then we talked about this, you know, in the chat room yesterday morning while I was on the train. Is when you get this this consolidation and this coiling effect, you're going to get the breakout, and then we finally got the breakout yesterday, and we went up and made those new highs. So in terms of the intraday numbers from yesterday, you know, you can see that we're now starting to trend back up. All the numbers are green for the intraday numbers. We had a higher 1230 number, higher RTH high, higher RTH low, and higher close and a higher VPOC. So everything's moving forward. You know, if you were in the homework session on Monday or Tuesday, we talked about the fact that, you know, we had a change in the COT report where the retail all of a sudden was getting net short, and you know that the commercial and the large spec were starting to sell into this rally. And I actually made a comment on Monday. I said, "You watch. This is when they're going to go. Just when the retail is starting to get closer to net short, this is when they're going to pop it, and we're going to break, and we're going to make that vertical move. And I kept on telling everybody we are going up, and we're going to take out that 77.75 and 80.50, and that's exactly what we did. Taking a quick look at the daily report, our full session high right now 86.25 in the Globex, and our full session low 81.25. I think that's still accurate. Let me just again, I got sidetracked with this conference call. So it's still 81.25. So our 20-day ATR targets to the upside is 1950 to the upside and 1867 to the downside. So, you know, my personal opinion is that we're getting close to this 1900. They're back in the, you know, the 1880s, and I think that they're going to try to, you know, push through to test the 1900s and get a blow-off top into the 1900s. I think it's setting up perfectly in terms of the timing as we're coming down to the end of the tax season, and they're getting all the retail traders in their RRSPs here in Canada, your 401ks in the U.S., and I think that they're taking this advantage to allow the retail to buy into this rally as the commercial and the large spec are selling to them. We had Canadian trade balance this morning, and unemployment claims gave us a little bit of that wiggle, a little bit of a weakness, you know, in just the last half hour. Of course, at 9 o'clock Central today, we have ISM non-manufacturing PMI. So, you know, watch your trade going into the 9 Central Time. Of course, we've got natural gas coming up at 9:30. Let's take a quick look at the trend macro to micro. Sorry, I wasn't completely set up yet. I always like to take a look at the market from a macro to micro. Just going to look at really quickly. So right now, you can see that the trend is very much intact. Good slope, good separation. The monthly trend is very much, we're trading in the upper distribution and coming up to that all-time high at 1887.50, and I do believe it's going to get taken out, if not today, by the end of the week. Going to the weekly, you're going to see the same thing. The trend is extremely strong. We came down, tested the 9 EMA, rejected it, bounced off of it, and now trading up above the prior 3 weeks highs. So we're really strong on the weekly. And then on the daily, you can see that we've been consolidating sideways, you know, for the last couple weeks, and then we finally made the breakout. We do have a naked cross right here at 1860. You want to mark that on your chart, and we're getting a bit of a technical gap against the 9 EMA on the daily. So I am looking for a rotation. I just don't know whether or not we're going to pop and take out that 87.50 before we rotate back towards and close this technical gap. A technical gap is where price action moves too far away from the 9 EMA and has to come back and close that gap either through time. Here's a perfect example of it right here. You had a pop up to the new high, and then we came back and rotated down and closed that technical gap. And that's something that I like to trade off of on a regular basis. Taking a look at the geometric chart, we talked about the the fact that we got back inside the lower line. These 3 lines right here are a longer-term fork that we've been watching for pretty much almost 3/4 of a year, and we finally got back into the lower. After breaking down below it, we got back in inside of it, and then the red one is an intermediate fork, and we were looking for a move to come up and hit this energy point. We did, fell back, tested the lower line again, and then we broke above the upper or the center line of the intermediate fork, and now we've broken out of the 2 opposing downward sloping forks. So I'll be doing some more work on the geometrics in the next couple of days to determine what we have in terms of opposing forks. But right now, we're broken back in. You want to keep an eye on this level right here at 1876. 1877. Really, I think it's 1877.75, that prior RTH high, and possibility coming down and testing that again today. And then, of course, above us, we've got this 1887.50. So let's take a look at what it looks like right now in terms of the intraday trend going into the RTH. Take a quick look at the 4-hour. And you can see here's another example of a technical gap coming down and closing that technical gap, created another technical gap, and then this is a good example of going sideways through time. Tech gaps are always closed either through price or through time or a combination of both. And this is an example of just going sideways and allowing the 9 EMA. But the trend is still intact right now to the upside, although it's weakening. And we're coming down to test the 9 EMA again. And then on the 30-minute, and you can see that 30 minutes showing us that on the news we broke down below the 9 and the 20. We tried to get back above the 9, failed, and then we're trading below the 20 right now. Well, just coming in between the 9 and the 20, but the trend has been invaded on the 30-minute right now, and we're basically coming into a consolidation. And I think you're going to see pretty much the same thing on the 5-minute. We were getting a bit of a weakness, and then we came up, tried to get above, and now we're back below. And so we're seeing a little bit of weakness coming into the morning session. So let's take a look at where we are in the composite. So you can see that after being in this balance of the microcomposite from February 21st through to the March the 31st, and then we broke, we came up and tested the upper side of the balance that's around this 1864.50, broke out of balance, and we moved up, and we had that gap over the weekend. And we continue to break out and stay outside of value and outside of balance. So a couple key levels that you want to pay attention to, just going to get this off the chart here, is below us, of course, we've got this CHVN at 81.50 that you want to pay attention to, and we'll talk about that when we get into the intraday. And then below that, you've got the 1876.75, which is a key line in the sand below us. If we get below that, then I'd be looking for a rotation back down to 1872 and a test of the other side of balance at that, remember that level that we were talking about all last week, which was the CLVN. It was actually 70.75 is the CLVN there. So that's the other side of balance around the 72.75. And then if we get back inside of the 70.75, I don't think that the 69 is going to be that important. I really think it's going to be the other side of the balance down here at 68.50. More specifically, you've got the value area high from the microcomposite here down at 1867.75. If we get below that, then we're getting back inside of this value, and I'd be looking for a quick move down towards what's going to continue to be a major magnet down here once we get back inside of the microcomposite range, is the microcomposite DPOC, volume point of control, at 64.50, with 59.50 being the other side of balance. I don't think that we're going to get that far today. I still think that we're going to end up getting some chop inside. We got to be cognizant of the fact that we've got, excuse me, we've got wicks above us and below us. So we've got this area between 76.75 and 79.75, call it 80, where we've got this unproperly auctioned territory, and we could come down and get stuck in the wick down here, or we could get stuck in the wick above us. We've got a wick that goes up to 86.25 and down to 82.75. So there is a probability when you get these areas, these wicks and tails represent, a disparity in the perceived value as the buyers and the sellers battle back and forth. And when you see them, these are unproperly auctioned territories, and we have a tendency to come back and get stuck in those as the participants auction the value within those wicks and tails, further. So we do have a possibility of getting stuck in the upper wick or the lower wick today. And right now, the fact that we're trading in the upper wick, I would be using this 80.75 as a defining line to stay long above 80.75, and then you want to start looking short, and with the possibility of just getting into chop down in the lower wick below if we get below that 80.75. But let's grab our Globex numbers and move it over and start setting up our chart with our levels. So I just got to set this up. I didn't set it up prior, so I apologize. So currently right now our overnight high is 1886.25, which is our range high from yesterday. And then we have our overnight low down at 81.25. And that's basically just below the volume point of control, the naked VPOC from yesterday. And then we've got our current Globex volume point of control sitting right now at 82, I think it's 82.50. Let's just verify that. It is 82.50, so we have our overnight VPOC at 82.50. All right, so let's get rid of this, expand this out. Okay, so currently right now, yesterday we had a perfect 10 handle move. Our low was 76.25 and our high was 86.25, and we ended up with a double distribution. And the double distribution, the upper distribution centered around this 81.50 with the LVN right at that 80.75. And you can see that the 80.75 is that CLVN as well. And then the lower distribution and where the VPOC was for part of the day was down here at that 18.79.50. So right now we're trading in the upper distribution. We've got our naked close that is at 82.75, and we're going to open up. If we open up right now, and we have 15 minutes to go, we're going to be opening up inside of value and inside of range, with the value area high from yesterday being 84.50. So if we open up inside a range and inside of value, then what I would be looking for is a rotation down to take out the naked close at 82.75, and I push through to take out the naked VPOC and the overnight low down here at 81.50. So what I would be doing is I'd be using this 84.50 as a trade area to the top side, and I'd be using this 80.75 as a area to do business, below. And inside of here, you want to be very careful about trying to get into a trade, because it's going to get choppy in here, because we're going to open an option in range and in value. If we break above this 84.50 value and we break out of value, then I think they're going to go for the range high and the overnight high. We've got a 96% probability of taking out the overnight high or the overnight low, and I think you really have to use 84.50 as your dividing line for which side is going to be taken out, the high or the low. So above 84.50, our first target above is going to be this this overnight high. This is no longer going to be our extended target. Our 87.75 is going to be our main target. If we break out of, 87.50. If we break out of range and break above this this 86.25, you could use this as both as a main target above the 86.25 and the trade area. And what I would do is I'd get long above 84.50 into this 86.25, and then if we break out and we hold above the 86.25, then I'd do an add-on, and I'd move, to, get an additional on and scale before you get to 8750, and that would take care of the equalization between the March high and the June high that we currently have right now at 86.25. And then, of course, you've got to be looking at the immediate target above, which is going to be this 1890 area. And then we've got the the big number above us and what will be our extended target for the day to the upside, and which is our 20-day ATR target, which is going to be that 1950. But really, it's going to be the centennial number here at 1950. And this is going to be our extended target for the day. Sorry. Come on. So that's going to be our extended target. And then remember, if we get inside of the 1900s, you should see and should think about the rule of 10 coming into play and a move up towards that 1910. Now, if we get below this 8450, then you want to get short into taking out the naked close at 8275. That would be my first target. Make sure you get scaled before there, and I'm just going to put a target there. But the main target below is going to be that is going to be the overnight low here at 80.25, with looking for responsive buyers to step in at the LVN and the CLVN at 80.75. Remember, sorry. Remember that 80.50 was our all-time adjusted high that they took out just the other day. And then below that 80.75, I'd be looking for the rule of 80 to come into play and a move down to test the other side of balance down here at 79.50 at the value area low, and what was where the VPOC was. So that's going to be my secondary target below. And then this is also where you'd look for value area buyers to step in and hold us in and rotate us back up to test the LVN from the lower side. But if we break below this 79.50, look for a move down, back towards that 76.75, which is the CLVN and the range low from yesterday. But I think that once we get into the lower distribution, we're going to get into some chop, and we're likely to get stuck in this lower distribution. You can see they're already moving up right now, even coming into the open. We've got 9 minutes to go, and it looks like they're going to go for this overnight high. So look for them to take out the overnight high and pop towards 87.50. If they get above 86.25 and they can hold strong, get long into this 87.50, I think we could even end up with a an overnight high, a Globex high that could be just outside of range and move a little bit higher. And then if we chop around in this zone and come down and test the value area, see if you see buyers stepping in. If you see buyers stepping in and holding us outside of that value, then I would take the long off of that into the 86.25. But if you see weakness and you see selling accelerating as we test this 84.50, then get the long. I mean, it's really all going to be determined off of these two levels this morning, the 84.50 and the 86.25. Above 86.25, we take out the 87.50 and we continue this push up to get into the 1890s and possibly a move to that 1890.75, or sorry 1900. Let's take a look at what it looks like on the Keltner right now. You can see the reason I've got this 1890 is the upper Keltner channel is right there at 1889.50. We're above the Keltner center line at that is at 83.75, which is basically in around this 84 in the value area high here. As long as we stay above that and we break out of that 86.25, I'd be looking to take the 87.50 out and a push up to test the upper Keltner line, which will likely be that 1890 area by the time we get there. If we get below the value area high at 84.50. We're likely to come down and test the Keltner center line, which is probably going to be right around that 84.50 by the time we get there. And then if we close below the lower Keltner line, then move down, the center Keltner line, move down to test the lower Keltner line. It's going to take us down into that 1878, but more likely by the time we get there, it's going to be this 1879.50. So that's what I'm looking at in terms of the ES. We really don't have time to look at gold. I'm just going to take a quick peek at it. Of course, we've been watching this this cup and handle formation on gold daily. Come on, open up for me. For some reason, it doesn't want to open for me. Oh, there we go. All right, so we've come down and we've now validated this this cup, and we're talking about getting short below the 1306 and below 1300 for a move down to that 1293 area, which was our first target, and the 1283, which is our secondary target. We've come down to 1283, and we actually got as low as 77.40, which was a CHVN that we were talking about on Tuesday, and found some buyers so far, and we're coming up to test the 9 EMA from below. Look for rejection off of this 1298 area, coming up and testing the 9 EMA, and then if we reject the 9 EMA from below, look for that continuation. Remember, we still have a valid cup and handle with the handle going down all the way down to that 1258, 1261 area. And let me just take you over to the composite and take a look at what that looks like on the composite. So we've actually come into this, down into this lower area. Let me just bring the. So we've got, right now, we're trading at 1285.60. We're in this this balance area down here. This actually, this should be not included. Come on, move over for me. There we go. So our current value is, still above us up here. Our microcomposite VPOC is up at that 1293. That was our first target below the 1300. You can see this is around that 1290.40 area. That's where we found balance after we broke, we accepted value after we broke out of this balance below, and that's where we started this move up. We've come down to find buyers at that level, and now we're chopping around. And of course, if you've watched any of the homework sessions, or you can go and watch the videos on YouTube, our targets below was this 1293 area, the 1283 area, and then below that was the 1274. And we're currently trading in around that 1283, 1284 area. If the other side of balance below us right now is this 1281. If we get below that 1281, then I think they go for this this 1274, 1275 area. But if they can hold above the 1281 area, then I think we chop around and we come up and we test this 1288.40 level. And then if we break out above that, and I really think we're going to see chop today around this level again, but if they break above this this 1288.40, look for a move up to 1290 and 1293 and a possible push up to test the 1300 from below. So that's what I'm looking at in gold. I apologize for the delays today. Just got some other stuff that's going on, but this is going to complete our morning pre-market session and trade plan setup. As always, trade well, trade safe, and we'll catch you on the flip side. We've made a move in the Globex now to take out that that previous high at 87.50, and we're going to open just inside or just outside of value and just outside of range. So this 86.25 is going to be a trade area whether we like it or not. And it's not it's not the open I was really hoping for. I was hoping that we opened up, and we were battling around the 84.50. But now we're outside of value, and look for them opening up. And whether they hold. If they hold this 86.50, get long when you see any type of buying coming in for them to pop it through the overnight high at 87.50. The 87.50 I don't think is going to hold on the open. Once we pop above it, though, then you got to start looking for those sellers to step in to take us back down through and come down and try to break back inside of range and come down and test the value. But if you don't see those responsive sellers stepping in, then look for them to continue this trend up and push higher. So let's just wait, and we'll take a look at how this is going to open. And I'm not set up for trading this morning, but and I don't have my my dome open either, so this is going to be hard for me to actually call it out. But we'll do our best, just like we did on the train yesterday. All right, so we have our open. Okay, they're coming in. They're trying to break inside of this this range at 86.25. Let's see if I should filter this down so I can see it. If you don't see buying coming in here, they're likely going to try to go down and test this 84.50 first. Very hard for me to call this without my dome open. I'm kind of trading blind right now. I can't see how they're printing around this around these levels. So seeing some bit of weakness coming in, they're trying to make a push down, getting some responsive buying coming in here, right here at 86.25. Delta is negative right now, and they're gonna pop this through 87.50 here. You go ahead and get long into 87.50. Just want to make sure you get a scale off. There's a little bit of selling coming in here, but they're holding outside of yesterday's range.